Hello everybody. In this video, I am going to give an update on my portfolio and show you all of my positions. Let's get started. Right now, my portfolio is worth $230,973.44. In the past year, I am up $68,728.21. Year to date for the year 2025, I am up $73,455.87. Today was a green day for me. I am up $6,924.10 today. Let's go over my positions. For my options, I'm selling Amazon $225 covered calls. These expire December 26. My return $3,240. I'm selling Delta Airlines $58 covered calls. These expired December 26. My return, I am down $12,100. I'm selling Google $300 covered calls. These expired December 26. My return, $3,921. I'm selling Robinhood $110 covered calls. These expired December 26. My return, $10,540. I'm selling Kroger $64 covered calls. These expired December 26. My return, $4,520. I'm selling SoFi $34 covered calls. These expired December 26. My return, $3,328. For my cryptocurrencies, I have Bitcoin, Dogecoin, and Avalanche. These are free rewards that I got from the last year's New Year's update. From Robinhood, so that's why I have these in my portfolio. But I might get rid of these depending on the new year. I'll see what happens with Robinhood's New Year event coming up, assuming that they have one. But yeah, these are that's how I got these in my portfolio. I'm just hanging on to these for now. For my stocks, I have 2,000 shares of Robinhood. Robinhood is at $119.50. My average cost, $122.92. My return, I am down $6,830.60. I have 6,400 shares of SoFi. SoFi is at $26.53. My average cost, $5.70. My return, $133,322.05. I have 2,000 shares of Delta Airlines. Delta Airlines is at $71.14. My average cost, $64.18. My return, $13,912. I have 300 shares of Google. Google is at $304.99. My average cost, $317.66. My return, I am down $3,800.40. I have 300 shares of Amazon. Amazon is at $223.86. My average cost, $219.10. My return, $1,427.87. I have 1,000 shares of Kroger. Kroger is at $61.93. My average cost, $67.69. My return, I am down $5,755. So this is a margin account. Let's go over my margin stats. My margin buffer is 23.69%. My margin buffer indicates how close I am to a margin call. The higher your buffer percentage, the lower your risk of getting a margin call. So because I'm at 23.69% margin buffer, I think I should be okay. I'm not that close to a margin call yet, but I'll update this if anything changes. But for now, I'm okay. For my usage, my margin used is $488,848.64. My margin available is $69,048.86. My interest rate, my annual interest rate is 4.5%. The daily interest that I am paying is $60.98, and I'm using $1,000 of margin interest-free. So again, it's pretty close, my positions and how close I am to either my shares getting called away or keeping my shares. For example, Amazon, I chose a strike price of $225. Right now it's at $224 and 34 cents. So super close. It could go either way at expiration. Delta Airlines is not close. I might change the strike price, or I might leave it alone. To be honest with you, I don't mind getting my Delta shares getting called away. It's fine if it stays above $58 at expiration. Yeah, but this is one of the positions that are not close. It's at $71 right now, and I chose a strike price of $58. But like I said, I don't mind if those shares get called away. Google, $300 is at $305 right now. So this is also very close. It could go above $300 at expiration. It could go below. Who knows? But either way, I'm fine with it. I'm fine with either outcome. Robinhood, $110 for the strike price, is at $119 right now. This one, I'm okay either way. To be honest with you, I kind of want to own the shares. So who knows? If it does go below $110 at expiration, I think I'm leaning towards preferring that rather than getting them called away. But either way, I'll be fine. If they get called away, so be it. But if I end up owning the shares, I'm okay with that too. In fact, I think I would like that long term. I think Robinhood is doing a lot of great things. Kroger, $64 for the strike price. Right now, it's around $62. This one could go either way as well. Who knows? But again, this is another one where I don't mind either way. I mean, owning the shares, getting them called away, I'm fine. SoFi. So, shares got diluted recently. I still believe in it long term. I mean, hopefully they're going to use that money well to grow their company. They're coming out with new products, like their new, what is it called? Their new smart card. So, I see potential long term for SoFi still. Perhaps that will change, but as of right now, I still believe in them long term, and I'm still holding on to them. Who knows what will happen in 2026, but that's still my feelings for now. But $34 for the strike price. Right now, it's around 26.5. I'm going to keep it at 34 for now. Maybe I'll change it to something lower, but I don't really see that, to be honest with you. I think I'm comfortable leaving it at 34 for the strike price. There have been so many times throughout the history of me owning SoFi where it exceeded my expectations and consistently went above the strike price that I chose. So that's happened consistently throughout the history that I've owned SoFi. So I am just gonna keep it at 34 for the strike. Sorry, I forgot to mention, but SoFi is one of the ones where I actually do want to keep my shares for now. Again, my feelings might change in 2026, but for now, I do want to keep my shares of SoFi. So I want it to stay below $34 per share. All right, so in the time that I was talking throughout this video, I'm now at 231. So far, very happy with my performance this year. Gained a lot of money. And I'm kind of celebrating by, treating myself out to some things that I've been wanting. New gear for my photography and videography, things like that. That's mainly it, really. I spent a couple $1,000s on myself recently for that. So, and I've been enjoying it so far. In fact, I don't know if you guys noticed, but I bought a new lens and I'm recording on it right now. So, yeah, it's been going well. I've been enjoying the fruits of my labor. Anyways, I think there was a question left on a comment recently about, when I'm doing my covered calls, why am I okay with losing money in the short term, right? Why is it that if it goes lower, right? Let's say, for example, Amazon, I chose a strike price of $225. Why am I okay with Amazon going down and down below $225? And the answer is, if Amazon goes down below $225 and I end up owning the shares, it is possible that I might suffer a short-term loss, right, from Amazon going down so much. But Amazon, I believe it's going to grow over time. So even if it goes down in the short term, that doesn't mean that it can't go back up in the long term, right? Some companies or some stocks could suffer short-term losses, but still have long-term gains. That's the way that I look at it. So that's the reason why I'm okay with stocks going down in the short term, because they could still go up in the long term. That's my reasoning. Anyways, I think that's pretty much it for this video. I have nothing else to report. If anything does change dramatically, then I'll let you guys know. But for now, it's kind of been, it's kind of just been like whatever in this last month. Hopefully it stays that way. To be honest with you, I prefer it to be a boring month and not much stuff happening. Yeah, I'm okay if it stays this way for the rest of the month until my positions expire, but we'll see. All right, that's pretty much it for this update. If you guys like this type of content, please make sure to like and subscribe, and I'll keep on making more of these videos. Thank you so much for watching, and I'll see you guys next time. Bye.